Hi, guys. Welcome back to this session with Anne-Marie. Very excited to have you here. We are again here in the show Trading the Edge. So the reason why we name it that way, because we want to show you guys how you can find an edge when trading. So welcome, Anne-Marie. Excited to have you.
Excited to be here. The market's been very exciting.
Absolutely. Yeah, very crazy as well. So lots of volatility. So I think we now are probably just over a month away from kind of like Thanksgiving. So for those who, of course, trade the U.S. market, that's typically when we look at the institutional level, the last kind of like period of really active trading, unless really bad things or like volatile things happen. Typically, the sentiment is after Thanksgiving, you kind of prepare for the next year, so you're really not taking any big position unless really something happens. So this year is obviously different because we've seen a lot of things happening in the market. You have, the wars in the Middle East and in Russia, the geoeconomic events, the tweets from President Trump and stuff like that. So the market has been extremely volatile, right? We've seen the crypto market going up, gold, silver. So very, very exciting. So how are you kind of preparing yourself, Anne-Marie, for the end of the year?
So, it's interesting that you say that. The number one thing I am doing in terms of actual prep is really deciding to either broaden out my time frame if I'm looking at futures formations, excuse me, option formations way into the future with what's really performing and giving the short-term structure a very nice tight range going from supports to resistance, and the MenthorQ levels have been extraordinary at doing that over the last couple of weeks, particularly as we watch the market sort of swing back and forth.
Yeah. And so we're gonna go into the chart and we're gonna show you some example, but I wanna really stress on a couple of interesting points that can actually provide you kind of like an edge. So first thing, of course, most of the viewers here will be interested in the futures market, right? So trading futures, but never underestimate the assets that are correlated with that market. So we're gonna look at ES, we're gonna look at SPX. So if you're trading ES futures, most likely you're going to be looking at SPX and ES closely together, but never underestimate the power of SPY. And the reason why I say that, because I want to show you a couple of things. So SPY is typically a longer term asset, right? So typically who invest in SPY are longer term asset managers, longer term retail traders that want to get exposure to the market. Like 401k plans. Think about every month in the US, all the 401k providers are adding money to the stock market, to the bond market, and they do it through SPY ETFs, QQQ ETFs, TLT, all of that stuff, right? So if we understand that, you also need to understand the type of player that might be trading one asset versus the other one, and how that market or how the segment is reacting. So one thing I want to show you, and for those who are not aware, we provide you with what we call our Q score. This is our really barometer to measure the sentiment of an asset by looking at different metrics: option activity, volatility, momentum, and seasonality, right? So as you can see, if we just take a picture of SPY right now, we are very bearish on the option side. The volatility is very high. The momentum is now neutral. We're really in kind of like more of a sideways trend. We saw a big downtrend on Friday, and now we're kind of like stabilizing there. But like, let's look at the change in the score. So like last week, just before, a few days before the big drop, the option score actually went from very bullish to very bearish. So that tells me that the market was preparing for something to potentially happen, right? So they did that through kind of like adding protection to their long positions, maybe buying puts, maybe selling options. So what we see is that the score really went from really bullish to very bearish. So we've seen this kind of like up and down of the option market. So the option market has been very volatile on SPY, right? So when you see something like this and you're trading, yes, you should really, understand what's going on there. How can I then prepare myself for something that could potentially happen? Again, nobody can predict news, the catalyst. You can prepare that, but you need to use the option market as an asset that can tell you what could potentially happen and how is the market reacting to that. So this was a very, very interesting kind of a use case that we saw last week. And of course, we had the news coming up from tariff on China, big drop, of course, the macroeconomic events and stuff. We cannot predict that. But again, we can see what the market is thinking, right? The market was worried. They were buying protection. They were adding exposure for a potential downside move. So we saw that a few days before. And then, of course, the market kind of like dropped all the way on Friday. Now it's kind of back up a little bit. And we're going to see some levels as well. So yeah, this was kind of like an interesting way. And then next, if we move to the futures, if we look at NQ, in the last couple of days, we've seen really the volatility playing out really nicely. Today, we are starting the session overnight, last night. Around these levels, our put support, HVL, then we saw the price going all the way up to our core resistance and breaking our one-day max, right? So this was very, very strong move in the overnight session. Now the market is we're still at the beginning of the session, but that was very, very interesting. If we go back to yesterday, I'm going to add the levels from yesterday. We can go and look at the ES. There was a really, really nice move. So in the morning, we opened, the futures were kind of like negative. We went all the way down here, and then we broke back above our one-day minimum, and we went all the way up. And now, of course, we're now going back to, this is the level for today, to the one-day max for the day. So this was a very strong move from yesterday, kind of like breaking below the one-day minimum all the way up now to the one-day max for today.
Could I interrupt for a second there and talk about how that one-day minimum and one-day maximum I look at as a trader? And so statistically speaking, we have this bell curve, right? And we talk about the ranges, and when we see, as we slip into the tails, far into the tails, we see these one-day mins and one-day maxes. And so as a statistician, I am reminded that once we slip into the tails, the longer we stay in the tails, the more likely the further out we go into the tails. And so one of my favorite things to do using the one-day min and one-day max is, as soon as I break it, I begin to look for action that confirms more movement away from that area. But I always have my eye on the fact that, hey, I can only go so far out into the tail before I begin to see reflexive action that pushes me back inside. So if you're a trader and you were thinking to yourself, wow, here's the one-day min, I need to buy it because that's really on the tiny edges of the tail, the one thing we have to remember is the following. First, when we see that 1 minute, we're going to see traders that will reflexively try to take the other side of the trade and push it back up into that motion. What we have to do as traders is remember to be present and think about, okay, who's doing this? Traders that want to catch a bottom, but are likely trying to force price up, as we look at the one-day min, trying to force price up when the power of trend and momentum is remarkably negative. And when that happens, we can use our gamma lines to help us, and our put support lines to help us say, okay, if I can't get up over that zone, momentum and trend are still in in power, and so it's very likely to use that one-day min. What I notice traders doing in MenthorQ sometimes is trying to say, absolutely, this is what's going to happen. And we can't tell the future, as Fabio says, but what we can do is know that these lines are very important. And so we want to see them break below and then fail the break below and then break up above that first line of resistance. That tells us we can press, step on the gas, and add to the longs. The same thing happens on the top side for the one-day max. So here we are sitting at the one-day max. It shot right up above. And if we zoom in, we're going to see this topping formation on this 1-minute chart where the traders realize, hey, listen, I've got my one-day max and it's going to move up. They're going to try and press it out, but people want to push it back down. So look for the failure of prices to make brand new highs, and you know it's going to try and head back to that one-day min. That's super important, super important. And it really gives you guardrails to say, instead of going, wow, do I take a long here? Do I take a long there? MenthorQ defines the spaces that will deliver edge. What you have to do at those spaces that deliver edge is realize that as big money is looking at it, there are going to be egos and algorithms and pressure events that say, hey, I'm going to buy this or I'm going to sell this because my goal is to step on your neck. Don't you think the guy at JP Morgan knows who the guy at Goldman is at the top of the desk? They're trading against each other all the time in this battle of egos, but these lines tell us where the battleground begins and where our motion comes in. When Fabio and I were backstage, I said, hey, listen, we've moved up over this level, and now what we're going to rotate right back down to is that 6740 call wall. And that is exactly what we are doing. Now, we take stair steps at the gamma lines, and so that's how we help ourselves trade around the position, right? If we take 2 contracts, we take one off at the gamma line, let it bounce up into that area again, and then rotate back down. Exactly. And so now we're looking at another gamma line. It's a space where we go, hey, this 6744, traders might try to fight around there. So I'm going to take some profit, see if it gets back up to 6750. As it fades, I'm going to run it right back down into that 6740. Just trust what you're seeing because the lines work. We just have to learn how they work in terms of understanding the pressure of the events. Trading has been very exciting, particularly using the flow structure that we can see mapped out by these gamma lines. I've just been super excited about it this week, Fabio, so I had to share how I was trading them and what I look at when I watch and stalk these MenthorQ levels.
And I think the other problem that we have is that as human, we always have a bias that things will always go up. So that's like a lot of our users were like, oh my God, the market is going down again. But in reality, if you take out that bias, the going down is actually a good opportunity because we future we can go
Exactly.
up or down, and that bring all you need is really volatility, right?
Exactly.
So the problem is that everyone is biased towards an upside, so they want the market to go up. They haven't realized that the market has been going up for 9 months now or 8 months. There was a bit in the middle where there was a lot of like drop. but basically overall year to date we are kind of positive. So it's normal that there is kind of like a bounce back, and also we need to understand that the big institutions, as you mentioned, they're not going to be standing there trying to lose the profit that they made until the end of the year. So they're actually, from now to the end of the year, they're actually protecting their profit. So when we see the market dropping, is also these institutions are not going to let that profit go away, right?
Right.
And the other thing, I think, if we look at the indicator, another cool feature that we have is the ability for you to actually make it much simpler through the roadmap feature. So if we go over this one, very, very easy. So I'm just going to set up my primary level and my JAX level here. And then what I do, I enable my roadmap, and I'm going to choose a ratio. If you're trading, yes, maybe a ratio of 2 or 3 is great. And then let's see if I now can kind of like see what happens, right? So what we want to do here is we want to basically trade those areas, right? So we want to trade in or out of those areas, and we want to try and stay maybe away from this, because this is going to be probably a choppy area, right? So if you're not a scalper and you're trying to take more like a swing trade, then maybe what could happen is that you see here we are chopping, and then we want to take the directional trade. So whether it's this one, whether we break through here. So having the kind of like roadmap feature there can
Could
allow
you, I'm so sorry. Could I interrupt you to show me again
you.
how you build those frame edges on that?
Yeah, so basically the indicator does it automatically. So the first
Okay.
thing you need to do is you need to select which level you want to have.
Okay.
It means that the more level you have,
Yeah.
the boxes are going to be more like
Yeah.
not as efficient. So I tend to take away maybe some of the jacks
Yeah.
level. You
Same.
could also do it with the, if you want to take away, let's just try with just the primary levels, that those
Mm-hmm.
big levels. So I take that away. And then what I do also, there is a setting here, which is create roadmap. So all you need to do is just tick the box and then choose the ratio. The ratio defaults to 4. You might want to like reduce it to maybe a 3 or a 2, depending on the asset that you do. The roadmap is done
Gotcha.
automatically, so depends on the asset, depends on the price action. So what you see here basically is very interesting, because now you have your area set up. So for example, if we go back to the morning, like you want to avoid kind of like this area and you want to avoid this area. So you want to trade this breakout and maybe trade this breakout. And if not, if now we're breaking through that, maybe you want to trade this movement here, or like if we go further down, this movement here. And
Okay.
basically you want to try to avoid, unless you're really scalping those hedges, avoid the chop, because then you might get stopped out very fast.
Okay. Very good. Very good. Understood.
I also wanted to show another example when we talk about the one-day max. So obviously, if we look at gold, then we're going to look at the data from yesterday, because yesterday was a very, very interesting move. We also saw a big move today, but I want to show you what happened yesterday. So if we go back to yesterday, these are the levels from yesterday. Here we have our one-day max here. So this was, and if you guys come, and we have a live session in the morning on gold. So if you guys join us, you can actually access our live morning. It's like 9 a.m. European time. So here we had our one-day max on gold, and then boom, massive move. This was a big move, like 100 points move or something or more. So again, this one was the data. One-day max you had it yesterday. This was coming into the morning, and then boom, we saw the big drop there. And we see a similar picture today.
Uh-huh.
Today we have our levels today. Let's see. So here we have the levels for today. And then again, we broke through this core resistance. As you can see, chopping around this area here, go up and then come back down. Boom. Similar pattern to the one that you were describing. So you're going above the tail, and then we come back strong.
Okay. Very good.
Yeah. Yeah,
We're
and
going to come right into that 67.40. This is so beautiful. We're just about 2 points away. Got a VWAP in the way, so it might get a little sticky right there, but absolutely fantastic. When you can use these things and make something like, $1,000 a contract just by sitting still and using these gamma lines, you're gonna, I mean,
yeah.
it's just a fantastic way to trade. Truly. It truly, truly is.
Yeah, and also the other thing is not only making $1,000, is also trying to avoid mistakes and potential losing $1,000 because
Yeah,
like for example,
exactly.
if we take this away, right? How do you know how far the price can go, right? How do you know? We are
Exactly.
not really any resistance support level by looking at the past action. So now you have a reference. So you have a strong call wall here, and then you have our 1-day max there. So we're breaking through. Yes, we could go all the way up. Most likely not for the day today. It's going to be very challenging to go all the way there unless some big news comes in. So now we're kind of like people taking profit, the market is fading back. And then let's see what happens now that we approach this level again.
Makes sense.
The other cool thing, I think, Anne-Marie, that we talked about last time, we also have the ability to add alerts now on TradingView. So we have a new TradingView scanner indicator there that basically can create alerts on multiple assets. So here I have the top 20 futures ETF stocks that everybody's looking at, the Max 7, the VIX, QQQ. So I could actually get alerted on any of these, and I can also get alerted on just some of the levels or all the levels. So you can select what levels you want to be alerted on. You want to see breakouts and breakdown. You click on OK, and then you come and set up your alert here. Select the scanner, click on create, and then this is going to pop up on your trading view. And again, you don't need to be in front of a screen to wait for the price action. You can actually wait for the price action to come to you, receive a pop-up, receive a sound, receive an email, and you're going to be alerted as soon as the condition is met. So that's going to be kind of interesting as well. So again, here you have 20 assets. You can also upload your own levels. So you can actually upload, you can, if you, let's say you want to be alerted on any other stocks, you can come to our dashboard, get the data right here, copy this text, come back to the dashboard here, paste it, add your custom ticker, and now you have, you're going to have the up to 20 custom securities that you want to be alerted on right there.
I love that.
Yeah. So now it's finding support around this core resistance again. Very, very nice. All right, so we got our alert here. We have our VIX. Very important, guys. Always watch the VIX. All right, so now we broke the 1-day min. We're now going back to the 1-day minimum there. So as you can see, we are being alerted in real time. Can go back to ES. And then you don't need to have this open. You can also minimize that, and you'll be receiving a pop-up.
And the alerts will still come. They'll still pop up. Okay, great. Yeah. Great.
Yeah, so very, very cool. And yeah, let me know if you have any question for me, Anne-Marie.
Yeah, when I come in and I start with MenthorQ in the morning and I see a lot of, this morning we saw a lot of memes kind of stocks just absolutely explode higher. Like we saw some of the quantum names just gap up monstrously, things like qubits and Rigetti and those sorts of things that feel like, wow, this to me, it felt a little like a toppy feeling. Uh, Let's say I come into the morning and I go, wow, I have a bias. Should I have this particular bias? Where should I start by saying, we always want to be present in the market as traders. Sometimes we get up and we go, this has got to turn around, or
Yeah.
this has got to move higher, or whatever it is. When we're staring something like that down, how how do we get ourselves to center first thing in the morning and we come to MenthorQ? Help us with that daily. Here's what you do first. Here's what I do first. Here's what my best traders using MenthorQ do. What would that be?
Yeah. So again, so the typical trader that we serve would be like the futures trader. The futures trader is looking at the bias, but then is looking at building a roadmap, building the levels, right? So we showed you how you can kind of use the chart there. Then we have our zero DTE traders. So we saw a lot of increase in traders that want to mainly trade SPX. It's a very lucrative strategy, but it also comes with a lot of risk, right? So you could actually, we have users that are buying or buying calls or puts to get the direction, or that are selling to get the premium, right? So if you sell, you want the market to be calm, so you can pocket the premium, maybe stay in the trade 1 or 2 hours, and then just pocket the difference in premium by looking at theta decay. But then we also have like a swing trader. So as you mentioned, you read the news in the morning, you want to get an idea on the stock that are moving. So we have a lot of tools for that. But the first thing I would start from would be, if I go on under our vol model, is really looking at volatility. I think one of the mistakes that people make, they don't really understand how to read volatility. So what we have here is kind of like, we call it VRP, which stands for Volatility Risk Premium Asset Monitor. So these are the top assets: sector ETF, SPX, QQQ, VIX, etc. So immediately you can spot outliers, right? So you can see that gold is trading at the highest VRP it has been over the past 1 year. That means that the implied volatility of gold is really high right now. So as you mentioned before, volatility is like a rubber band. So like, it's going to eventually decrease over time. When that's going to happen, we don't know. But like, we know that this is an outlier. We also know that silver is an outlier, right? It's a big outlier. So we saw silver going all the way to all-time highs. As you know.
52 and some change. It's bananas.
But we also see that SPX and QQQ are also quite big outliers. So they're actually trading at a very big premium. So you're actually getting a lot of value if you are selling up. So this quadrant is divided into kind of buying option buyers and selling option buyers, because the reason is that if you are buying options on SPX or gold, you're actually paying a very high premium. That doesn't mean that the premium is going to go down, but you actually have to account that. So if you're like an option trader, you need to understand that you're actually paying very expensive premium to buy calls or puts on gold, SPX, or QQQ, right? You're actually paying not a lot of premium if you're buying options on XLB or XLU. So this is kind of like give you an idea. Okay, like, is the market rich or cheap? Is volatility expensive or not? And this can tell you a lot about what the market expectation is. The second is I can go on to our screeners, and I always love to see the Q score screeners. The Q score was developed to give you very quick snapshots. So is this asset bullish or bearish, right? And I'm looking normally at the option score and the momentum score. But I don't just look at the high score or the low score. I like to see the data, right? So I want to see, for example, which are the assets that I've seen like the biggest increase in option score. So for example, this is really interesting. Russell went from very bearish a couple of days ago to now kind of being almost bullish. This score goes from 0 to 5. So this could be an interesting small caps, overall market, Russell 2000. Then we have JetBlue, we have Lucid, Norwegian Cruise Line. But Russell is really interesting. So we can go here and look at Russell. And then now we see that although the overall indices like SPX and QQQ are in negative gamma and are showing kind of like a negative positioning, the Russell is now showing positive bias coming from the option market, right? So very interesting. I can also see this is kind of like the VRP model for Russell. I can see basically if volatility currently is cheap or expensive. Here we are looking at the difference between implied volatility and historical volatility. So we are now kind of like in kind of a cheapish environment compared to a couple of days ago. So that means that if you're thinking of selling premium, you're actually not getting a lot of premium for what you're doing. So maybe it's probably more to maybe buy option if you're thinking, and then you can bet on the direction. The next step is I want to see how the market is positioned around the full option chain. Again, why is that important? Because the option chain tells me the sentiment of the market. If next week the market is really bearish on an asset, is because maybe there is an expiration, there is an event, there's OPEX, maybe there's earnings or there's a Fed meeting, then that means that people are going to react to that information. So what I look here is I'm looking at overall throughout the option chain from now to the end of the year, are we seeing more positive or negative gamma, and has this increased or decreased? So we've seen like a big increase in positive gamma around October 17th. So this weekend, OPEX scores very important. And then I want to look at my levels, my swing levels. Why are those important? Because the idea behind it is where are the areas where the price will not be. So you want to know, okay, what is my lower ceiling and what is my upper ceiling? And are we going to trade within this range, or are we going to break out of it? So what this is telling you is that on 84% of the days, we're talking about 120 days, the market stayed above this lower band. So again, it's not 100%. Nobody can give you 100%, but like what it's telling me is like, okay, like, so if I'm placing a bet, I can use that level as kind of like a confirmation or a confluence zone. To the upside, let's say that we move to the upside. Oh, the risk trigger has been hit. Well, there's only 47% chance that the price is gonna drop below that risk trigger. So that means that, hey, maybe that risk trigger is actually a very important volatility level that I can use.
Interesting. So what I want to do, if we're staring down something like that, are you thinking iron condor? Are you thinking a bullish put spread? Are you thinking long calls? Are you thinking something like, I don't know, what do they call that? A jade lizard, a synthetic long, or something like that?
Yeah, so if you come to our YouTube channel, and on Friday, I'm gonna go over actually, it's another kind of episode of what we call trading like a quant, because essentially you think a quant is obviously this gigantic engine that has a lot of data, but in reality, the process is really simple. You're looking to create an edge by adding factors to your strategy. And we're gonna show you on Friday how you can start from really the simple analysis that I showed you to potentially add factors and create a better kind of return on your strategy. So the idea behind it is that you can start from one of these factors. You could start from the Q score and say, okay, like the Q score is bullish, and on top of that, now let's overlay that with the volatility. So if I see a lot of high volatility, maybe I don't want to go long or short, maybe I want to sell option, right? Because I'm going to get more premium for what's going on there. So on Friday, I'm going to show you a very simple example with Excel. It's nothing complicated, no Python code, very simple on how you can kind of replicate that kind of analysis. So But the idea is, is so. For example, if I go back to my vol model, so in this case, just by looking at this, I would not want to buy option on this quadrant. So I would be looking at selling option, whether it's through put spreads or
Where's this tab again? I'm sorry to interrupt.
sure, it's under volatility models.
Okay.
Right?
And I'm trying to replicate that in my
So if you don't have it, just click on add command, and it's going to be one of these, the last two ones.
Gotcha.
So like for
Always
example,
wondered
if
there.
you're looking at gold, right, and the market has gone crazy on gold, but again, the volatility is very high, so there's a lot of risk there, right? So you want to minimize your risk. So how do you do that? You can do that through option strategies. You can do that through obviously
Gotcha.
directional trades. So if we want to look at GLD, we can go and see what's going on there. We open GLD here, and then so we see that we are kind of still in a very, very bullish environment, both from the option market, the momentum. We have a very high volatility, as we mentioned. We also have our volatility risk premium, which again, as we saw it before, is at the 100 percentile over the past 3 months. So you are getting a lot of premium for the options. The option price are pricing a lot of premium. So that means that if you're thinking on buying calls or puts, you're actually probably gonna potentially make yourself in danger, because if the volatility drops, then
Yeah.
the
Too
underlying
expensive. Yep.
this was also one of the mistakes. I don't know if you remember, Anne-Marie, when the GameStop saga was happening. So everybody was buying calls on GameStop, but they were underestimating the volatility. So implied volatility was at the highest, so you're paying a lot of premium. So everybody thinks that options are just reacting to price. So if the price of an asset goes up, then my option is just going to go up. It doesn't really work like that. So volatility, very important. Theta indicators, of course, very important. But I think volatility is actually very key. That's why we develop kind of like these models here.
Yeah. Love it.
So again, so I see something like this. We are in a bullish environment on gold. The volatility is really high. So can I find opportunities by limiting my risk? And how can I do that? Then I can kind of use my swing model. So here we see, for example, that the lower bands here in this case were successful on 92-93% of the cases. So that tells me that this could be an interesting ceiling over the next 5 days. If I want time, I can go on the 20 days. So we have this kind of level here. And then again, so and then just looking at the option chain, understanding.
It's pretty amazing. Gold looks like it's a meme stock right now. It's just incredible motion, like nothing I've ever seen truly in gold, ever. It's very interesting.
And the problem is that it's not only gold. I think to worry is silver, right? Because
Yes.
silver is it's kind of like it's kind of like gold, but we have to look what's going to happen there. So we'll cover this macro topic, but
on a general sense, when you think about things like that, of course, we can't predict tops because that's how we get our faces ripped off. But if we're taking a look at something like this and we're looking at this volatility risk premium, I find it to be such a fantastic indicator of um, just being cautious, instead of just buying calls. If you're playing this game, you could sell short puts, but then that runs, if you have a tremendous dip in that space, you still, run quite a bit of significant risk. Do you ever think about looking at an inverse and seeing if you can play those against each other in a pair.
Sure.
What sorts of things can you look at if you go, all right, I see gold is it's too expensive. Do I look at an inverse ETF that's not levered and try to see if the risk premium there might be um, a possible one to look at? Does MentorQ put that in the space, or are there other things that we can look at to maybe
Yeah.
um,
So I think with inverse ETF is always tricky because you have
yes,
they use leverage. So the problem is that you also need to understand the curve of the future that they're using. So whether we are in contango backwardation. So as a
correct.
retail customer with inverse ETF and leverage ETF is always very dangerous. So
Gotcha.
and also if
Gotcha.
you're adding options to that, you're then
Hmm.
adding another layer of
Yeah,
derivative.
another level of danger. Yeah. So
So
how might I look at, say, cross asset um allocation if I want to say, hey, I really outside of silver, is there anything I can look at in MentorQ that tells me, all right, how can I measure a ratio, like a correlation between what's running with gold and what's running someplace else, that maybe I can go there because I'm just too,
yeah,
well, I'll be honest, I'm nervous to buy
yeah,
gold up here.
yeah, of
I,
course,
I
because
mean, people that are buying it are just really pushing the envelope. I think there's a reckoning coming. I just it's it I wouldn't be surprised if it's within $200 of where we sit, but I
yeah.
mean, I've been
Uh,
thinking about
yeah,
that for
in
500
terms of
bucks.
correlation, you're more talking about kind of like a macro model, so understanding
Mm-hmm.
of the assets. So yeah, we don't have that yet. What we do have is, which is also very interesting, if you look at our crypto section,
Mm-hmm.
show the crypto because it's really interesting because crypto is very macro driven. So what we built
Mm-hmm.
there is a macro model for crypto, which can also be allocated to a lot of the other assets, right? Although it works really
Interesting.
well for crypto, but is really it could also work well for other assets. So we call it the risk on and off indicator. So think about what happens when we see a crisis like COVID hit, right? Everybody's selling the most risky assets, so stocks, crypto, emerging market asset, and then they sell the more liquid ones, gold, treasuries. So when we had like COVID, uh, every asset was going down, even if they were inverse correlated to the stock market, not because
Mm-hmm.
correlation, but because everybody was liquidating the most liquid things that they had. So those are gold, treasury, and of course the stock assets and crypto, right? Um, so what we have here is we have an indicator that tells you when we are coming into a risk on, which is good for crypto, positive for crypto. So the macro environment is telling us that could be a good time to go into the crypto market because the macro supports it, or when we are in kind of like a risk off scenario, right? So now we are kind of bouncing here, or we
Mm.
on the risk on. So you can see how kind of like the level we went on a risk on, we saw this massive uptrend, risk off, we saw kind of like this massive kind of move here, and we moved kind of chopped a little bit, we saw another trend, and now we're kind of in a kind of, I think we're in a risk off, I believe. And then so that can tell you if the, again, gold reacts differently from crypto, of course, but this is kind
Right.
of the first kind of,
Yeah, I like that. I really had never made the connection that Bitcoin is macro driven. I
yeah.
truly have not. That is absolutely incredible.
Yeah, so this kind of like is at the macro side. Again, if you are a crypto investor, crypto trader, like you want to know this because if you are holding long-term position on Bitcoin and we suddenly go into like a very bearish environment, maybe Bitcoin will still go up eventually, but you could see a really massive drop. So when we remember
Right.
we dropped, I think 50, 60%, and then of course went back up again. But
Mm-hmm.
the
Mm-hmm.
opportunity come and can be captured. The second one is kind of the direction indicator. So again, we look at the macro level first, and then we look at the asset, and we want to see if we are in a bullish or bearish environment. So the risk on is for all the crypto market, whether you're trading stable coins or small coins or Bitcoin or Ethereum, the main ones. The direction is for the single asset, so you can see how Bitcoin direction moved. So you got this massive uptrend here, then you kind of got into that downtrend there. So here we were kind of dipping down, so you saw like how we were going low, and then we can go into the other cryptos. So if you want to look at Ethereum and all the others, so we have it all here. So this is the direction. We're still in a risk-on scenario, although we are kind of approaching a risk-off
neutrality.
Scenario.
Yeah.
We are overall bearish on all these crypto assets. So the direction is telling us that we are kind of in a bearish kind of trend. Besides, we're still kind of like in a risk-on macro environment. We're still bearish on the direction of the asset.
Interesting.
Yeah.
And how are these ranked? How are these?
You can rank them really.
Oh, anyway. So how do they normally pop up?
I'm not sure. I think maybe it's alphabetical order.
Gotcha.
Yeah, and then you can kind of rank it by direction or performance. The performance right here.
Interesting.
Then you can kind of go into the quant models there, but we also have option models. So we also have crypto derivatives options for the major currencies, so if, the major crypto. So if we go on Bitcoin, we can see, again, we can see our Q score. So we are kind of low momentum, kind of low. Even
decision zone for sure.
Yeah.
Yeah, definitely decision zone.
You can kind of see the different models there. So we have everything that we have for stocks for crypto as well.
I normally interpret that Q score of 1 to mean decision mode, meaning there's a pocket of indecision, and so they're waiting. Is that the right way to think about a momentum score of 1?
Yeah,
that there's congested motion and a decision that's likely on the horizon?
Yeah, so I think you need to think about as you would. I don't know if you have ever received any research with analyst ratings and recommendations. So typically those ratings are from 0 or 1 to 5, right? Very simple, where 1 is kind of bearish and 5 is kind of bullish. So we kind of mimic the same approach, where 0 for us is really bearish, 1 is of course very bearish, and 5 is bullish, right? So those, you can see them as your kind of like barometer for the assets. So in this case, when I open Tesla, I can immediately see like, okay, we're almost at the top of both our momentum and option. So we're kind of bullish on the asset option market, but we're very high in volatility. So this flex for me is that, hold on, is the market gonna potentially react because the volatility of the asset is really high, right? The seasonality, there's not really a signal coming from a seasonality, so we don't have anything coming from there. But then we can kind of go down here and see all the different models. What I like to see is the change in the score. So when I see, for example, when we go from 5 to 0 in a very small amount of time, or from in a very small amount of time, then I can see like, okay, we were very bearish. This was, I think, around July. Yeah, July. And then now we're going super bullish. The accelerator is on. Now the option market is back. So, boom, this is like the massive trend that you see here. We have the same thing on NVIDIA. So if we go on NVIDIA and we go back a little bit in time, we could have really captured this really massive trend that we saw. So now we have to go back a couple of months. And of course, with NVIDIA, you have all the AI narrative and stuff. But for example, if we go back, I think it's actually more than a few months. Go back to June. Okay, there we go. So in April, we were almost at under $100. Everybody was worried about NVIDIA, of course.
Mm-hmm.
First thing you do, you panic because you think the stock is going to zero, but in reality, it's impossible because they produce all the component of
Mm-hmm.
AI
Right.
that we have today, right? So then the option market went super bullish from 0 to 4 here. This was April. We were at $100, and I think today NVIDIA. Let's see. So we are 180. So that was like almost a 100%.
Oh, it just filled the gap. That's going to be a pretty interesting buy zone right there. Traders are going to come in and attack that first.
Mm-hmm.
So, oh, let's take a look at the ES while we've been chit-chatting. It's done a really nice job falling in between the big call walls and the put walls. What I think is pretty interesting if we stare down these gamma lines.
Yeah, exactly.
Just absolute beauty.
What were we talking about this before? Box to box?
Yep.
Yeah.
Absolutely. Absolutely. I live on the side of danger, so I will jump in the box if I see direction. I love to anchor a VWAP on any high volume candlestick that moves up or down, and I love using the levels at the same time to do that. But we are coming into a space where we easily could see another rock fight between the buyers and the sellers. Buyers have a lot to prove this week. They really, really do. They have a lot to prove.
Yeah, and I think this principle, and we have Patrick here, so I want to welcome him as well.
Hey, Patrick.
We're going to get you back soon. But so Patrick has been really doing a great job in our pro trading room. So we have like live trading sessions every morning for like 3-4 hours a day. And Patrick has been really managing this group. And we have a couple of other traders as well that have been really fantastic. But the roadmap principle starts from kind of Patrick and his experience of trading. And it starts from defining these areas, right? So you define the high congested areas that you don't want to stay in, right? So you don't want to be chopped here. You want to get this move. You want to get this move. So we built kind of like the roadmap principle.
I like that.
On the back of kind of Patrick experience, and then we tagged it into the indicators. So like another really interesting strategy that Patrick has is called the handshake, which is really trading from the same type of level and the zero DT is equivalent. So here the handshake would be HVL to HVL zero DTs. Those are like high volatility nodes, and basically this would be kind of like one of his setups. So if we were to break below the HVL, then we are going to target the next kind of like similar level, which is the zero DT version of the HVL, right?
Okay, very good.
Like a typical setup that we see, and typically when we break here, volatility kind of tends to increase. So this could be a nice area there.
Nice. Always learn a lot when I get to spend time with you. I really do. I learn more ways to use. MenthorQ is such a powerful platform. Every time I come, I end up learning something more that I can use. The tools are just so vast. You could spend years learning how to use them well, and on top of that, you're always bringing new stuff to us. So excited about the next unveiling of the next base. I've got my calendar set on what's next.
Yeah, so I think we are very excited for next week. So stay tuned. So first of all, we're going to have a few other sessions this week. So we're going to be live with Patrick on Friday. We're going to go over our NASDAQ and NQ playbook. So we're going to show you what we do in our pro rooms and what you can kind of like expect every morning. So we're going to show you how to prepare for the day. We also have like a lot of events as well. I'm going to show you that very soon as well. And then on Friday, I'm going to go over how you can use this data and trade it like a quant. So think about if you were in a large quantitative firm like Citadel, Millennium, or any of those, how would the quant approach data and what would they do to build a strategy? So we're going to use the same approach. I'm going to go over it on Friday. I did the previous session here, so if you want to go over and see the process, just come to our YouTube channel and you can kind of find the previous session right here. It's going to be available. And then next week we are launching our quantitative intelligence. So it's our AI tool, Quinn. So Quinn for Quantitative Intelligence by MenthorQ. Very excited about that. So stay tuned. I'm going to go live next Thursday. In the meantime, we're going to share a lot of information over the next few days, but that's going to be game changing for a lot of our retail customers. So stay tuned. We are very excited, and yeah, it's awesome.
I'm really looking forward to it. It's been amazing. It's been amazing so far, and looking forward. I'm going to really work on those volatility spaces that you shared with me.
Yep.
The VRP cross asset monitors and the volatility tracker. I know you've shown those before, but for some reason they finally clicked this morning, and I love it when that happens.
Yeah, and it's all about outliers. It's all about probability of coming back to the mean reversion. So finding those opportunities through the data, through the screen is very, very important. And with Quinn, you're going to be able to actually run that analysis much faster, similar to if you had like somebody helping you next to you, going through all the data and giving you the information that you need in a timely manner.
Excellent.
All right. I think we are almost over. So let us know, guys, if you have any questions. If not, just kind of sign up for our free membership. Next week, we are also going to open up our dashboard to all our users, so you'll be able to access and see some of the data. So if you just
that's awesome.
Yeah, so if you create a free account next week, you'll be able to kind of like interact with some of this data that we showed you today. So just join us for free. And if you want to ask us any question, just send us an email, info@MenthorQ, and then please scan the QR code. There's a lot of important information there, some of the links, some of the tools. So yeah, don't miss it.
Can't wait.
Awesome. Thank you, Anne-Marie, and I'm really excited. Always
My
great
pleasure.
to have you. And,
yeah.
See you again soon.
Yeah, absolutely. Thanks so much for having me, Fabio. Love MenthorQ. Can't get enough of it, and today was no exception. So awesome.
Have
And
a good
I'll
day,
see
guys.
you soon.
Bye-bye.
Bye-bye.